Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and today I want to look at Shopify. Here's why. If you are a candlestick trader, you would look at this and say, wow, this is what's called the tombstone doji. Next move, down. This was a big, massive spike and then a nasty close. So effectively the buyers were rejected right here, and then all the selling happened. So you got to stay away from this. That's it. This is the bottom right here. Get out right now. Now, that may very well be the case. However, if you look at the intraday chart, you'll see that this, along with several other NASDAQ stocks, there was an exchange issue. Didn't have anything to do with news out of Shopify or any of these various other companies where the stocks did this, but there's a huge, massive gap up, and then the stock was halted. And then when it finally started again, it fell back down. So it wasn't this big buying spree. It was an exchange issue. So it's kind of like this has screwed up the chart, though, if you're looking at it in a traditional candlestickian way. So I like the stock still. We've been in it in Stock Market Mentor as an active trade for several points. Started at 38, like right there. So as of yesterday, we're up 13-ish% now. We're still up 9.5%. I like the way this is trading. I would say that their earnings don't come until the middle of next month, so there's plenty of time for this to keep moving. I would suggest, guys, if you're in the in our Stock Market Mentor group on the premium side, I'm just suggesting that you keep the stock. We've got the stop currently at 37.65. So what we're doing is we're effectively locking in like $1.20, $1.21, something like that. In losses, that's our maximum risk, is $1.21. And so this gives the stock room to move. It can gyrate around a bit, which is what stocks do. You see, it doesn't just move in a straight line. And then if this stock runs above 45, that's when I would actually buy more. That's when I would add to the position. So, okay, that's all I have for you. I'll see you tomorrow.